Hey folks, we are live today for our YouTube live. It is Thursday, February 1st. Hope everyone's doing well. So I just finished off our coaching calls for today, and a couple of things that we talked about is kind of putting this volatility in perspective. Before we look at an interesting chart here, I want to quickly tell you that I probably received, I want to say 15 to 25 emails yesterday of people basically, this is literally what they all said. They all said, Serge, I don't know what to do. The market is too volatile. And I mean, I respect the questions, but let's put some volatility in context. The markets are not volatile, folks. There's like zero volatility, historically speaking. It's just that we had like almost negative volatility over the past 12 months. If you can't handle the little tiny blip of volatility we've had over the past few days, then you need to seriously reposition the way you're looking at the market, okay? We're coming out of an abnormally low volatility in the market. If you can't handle the tiny bit of volatility we've had, which doesn't even count on the radar, you are way over levered or you're not using the right strategies. So let me show you, let me put all this in a little bit of context so you can understand what we're talking about. And we're gonna flip the thing here and go over to this. All right, so this is a very simple chart of the VIX. And let me make this a little bit nicer. VIX is, of course, the S&P 500 implied volatility index. It's also called the fear index by some people. And let's just kind of put this in a bit of context of where we are. Okay, this is where we are in the bigger sense. Let me make this a little bit larger. Okay, and by the way, if you like this, give us a thumbs up. But this is where we are in the bigger sense. Okay, so this is right now we are like here. All right, this is where we are. Now you tell me. But we're not here. We're not even in the middle of the ranges, right? So the amount of freaking out I've seen over the past 2 days of people sending us emails would imply that we're somewhere up here. We are here, okay? And the reason people are freaking out is because we haven't seen any volatility, literally none, over the past few months, or actually the past year and a half or so. Let's put the S&P 500 up here. And to give you a little bit of context, and just so you know, the S&P 500 is like basically 2% off its all-time highs. That's nothing, okay? Let's measure it out for you, okay? If you are freaking out over this, and again, I can't make this stuff up. I had several people email us, like I said, 15 to 25 people, something like that, literally telling us the same thing. Serge, I don't know what to do. The market is too volatile. Guys, we are 2% off the all-time highs of the S&P 500. That is nothing. It doesn't even count. You shouldn't even like flinch upon them. Now, can that lead to a 15% correction? Of course it can. But if this is making you nervous, just this little bit, you are way over levered in terms of the market, okay? So to give you a little bit more context on this, and this is the kind of stuff that we talk to our coaching clients about and Clubhouse members, all that kind of stuff. Again, I just want to bring out the same chart that I showed a couple times in the past week and a half or so. We are historically overbought in the S&P 500. Like it's literally like an all-time record overbought level long term. Doesn't mean you have to short the market, but we are basically in just about any way you measure it, we are very overbought for now. Okay, doesn't mean you have to short the market. Doesn't mean you have to go out and talk about start posting bearish themes all over message boards or whatever. I guess message boards don't even exist anymore, but you know what I mean. This is where we are. We're overshooting, and it's even worse than the NASDAQ 100 in biotech. We talked about that yesterday. So again, let's keep the tiny bit of volatility we've seen into context. If the S&P 500 from here corrects down to where it was a few weeks ago, which is like 5-ish% lower, that would be nothing. That's like a normal retracement, just that we haven't seen in a long time, okay? So the entire point I'm trying to make here, let me flip this around. The entire point I'm trying to make here, folks, is if you can't handle a normalized market environment, okay, we haven't had a normal market environment for the past 12 months. If this tiny bit of volatility is freaking you out, you need to really revisit the way you're looking at the market. Most people at this point are way over leveraged stocks. It's just the nature of the cycle, I should say. So again, please keep these charts in perspective. And if you can't handle this kind of bit of volatility, then I would urge anyone to start reducing risk and hopefully sleep better at night. So Please leave a comment down below or a thumbs up if you have any likes or questions, and we'll see you in the next YouTube Live.